But is this that time to break glass and take that money out and throw in the market? I don't know. What is up, everybody? My name is Adam, and welcome back to Broke Man Finance. Over the past few days, you may have noticed some headlines floating around that read, Evergrande Debt Crisis. Now, although those words aren't very descriptive, it doesn't tell us a lot, and the average person probably wouldn't even blink an eye at it, it is a really big deal in the market world right now because of the implications it could potentially have on our money from this debt crisis. There has been a lot of talk going around right now about a market crash ensuing because of this Evergrande debt. So in this video, I'm going to explain who Evergrande is, what they do, the debt they have going on, the issues that they're facing, and how it could affect your money. And I'm going to try to do this in normal terms that makes it easy to understand. Plus, I will give you the latest updates about what happened today, what came out in the news regarding Evergrande, but I'm not going to get too far in the weeds on it because there's a lot of things in there that you probably just don't care about. All you really care about is how it affects you and your money. So if that's something that you can appreciate, then do something that I can appreciate and make sure you smash that like button and remember to subscribe to continue getting updates just like this about how world events can affect your money. Let's start with who the Evergrande Group is. The Evergrande Group, or the Evergrande Real Estate Group, is China's second largest property developer by sales, making it the 122nd largest group in the world by revenue. And that's according to the 2021 Fortune Global 500 list. It was founded in 1996 by this person. They sell apartments, mostly to upper and middle income dwellers. In 2018, it became the most valuable real estate company in the world. Let me say that again. In 2018, it became the most valuable real estate company in the entire world. They also have amusement parks, professional sports teams, electric cars, and even bottled water, but they are primarily in residential properties. They have over 200,000 employees and over 1,300 properties. Now, obviously, a massive operation like that has a lot of moving parts, and something like that doesn't just grow overnight. They had to have some help. And of course, whenever you need help with finances, you go to who? Banks. And what do banks want back? Interest. So it is very easy for a company like this that wants to grow at a very fast pace to outpace their revenue and grow a lot of debt, which is exactly what Evergrande did. In fact, it's reported that they owe more than $300 billion in debt. And not only can they not pay their bills, but they also can't pay their employees. Not only can they not pay their employees, they try to borrow money from the employees that they can't pay. Think about that for a minute. That's the equivalent of your boss coming up to you and saying, yeah, we just can't pay you this week, but could you spot me 20? That's the kind of shape Evergrande was/is in. They are broke and owe a lot of money. And not only to banks and not only to employees, but to also just regular people who put down payments already on these properties that have yet to be built. Not good. As you can imagine, their stock plummeted after the news started to gain traction across the world, and it dropped massively. That should have been a no-brainer. Let's stay with the debt issue and what it means for us. Luckily, we, as in the U.S., our index funds really aren't exposed to Evergrande in a big way. It's pretty damn minimal. So I don't expect, even if Evergrande goes bankrupt, which they probably will at some point, and I'll get to that in a moment, I don't expect it to really flip our index funds on their head like another company may that we're much more exposed to, that is weighted much more heavily in our index funds, such as an Apple. Meaning Evergrande may be at best 0.25% of an ETF, an index, whatever. It depends on how it's weighted in said fund. Now, which if it's 0.25%, which I believe it is the biggest one, that's not that big. That's not that much of an exposure. That's the whole point of having index funds and ETFs, because it limits risk, right? It doesn't take away risk completely, but it limits it greatly. Now, let's say it's Apple, and Apple, instead of 0.25% is 25%, you're going to see much harsher effects on a company like that, like Apple would have, going belly up across an economy. because of how much we are exposed to a massive company like Apple. But because Evergrande is such a mammoth company in China, the effect will negatively touch a lot of other companies they're associated with. Plus, this will spill over into their banking system, their overall economy will take a hit, the businesses they work with and partner with will take a hit, etc. When this happens, because China, like it or not, is such a big player in our own economy, we will likely have some negative effects from it as well. Hence the reason a sell-off of sorts began happening in our stock and crypto markets here recently. You've heard of FOMO, the fear of missing out. Well, the fear of the unknown can be just as powerful of an influencer as FOMO. This is known as contagion effect. And for someone like me, bring it on, and hopefully someone like you too. I have money sitting on the sidelines, it's getting warmed up, it's stretching out, it's ready to go to work, it's ready to get in the game, but I want to wait till that opportune moment. I want to wait for that global crisis or whatever's going on that really drops that market. But is this that time to break glass and take that money out and throw in the market? I don't know. At first glance, I thought, absolutely, this is going to be nasty. This could be a nasty, nasty correction, depending on how deep this thing goes in China, because China touches a lot of stuff in the U.S. economy, and I think it touches a lot more than what people realize. They have a very, very large stronghold on a lot of companies in the United States. But I don't think it's as bad as we first thought. At the first knee-jerk reaction, I think people started to freak out and a sell-off started to ensue, and not only in the stock market, but in the crypto side as well. But I don't think it's as bad as we first thought, and I'm going to explain why in a second, so don't freak out and start selling anything. A little earlier, I mentioned that there was a jump back up in that stock price. Well, that's because Evergrande has negotiated a deal to pay back interest on a bond, plus is prepared to pay around $30.5 million on another, which I know is a joke of a number compared to the $300 billion owed. Second, their debt only makes up around 6.5% of the total debt in the Chinese property sector. So it's not a crazy, crazy amount that's just going to flip the entire real estate market on its head. It'll take a hit, but it's not going to crush it. Third, well, Evergrande owns a lot of shit. In fact, their assets add up to, as far as the stuff they could actually sell, buildings, yada, 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 adds up to over $220 billion. Now, yeah, before you say it, I know that still doesn't cover their total debt. I understand that. But whenever you're looking at pennies on the dollar, that still takes a good chunk out of that $300 billion owed. Which leads me to another question that continues to be asked, and that is, will the Chinese government bail out Evergrande, similar to how the U.S. government bailed out banks back in 2008? My personal opinion, no. Not with the amount of assets they still own and can sell, including the businesses, especially if they were able, like we're reading, that they were able to renegotiate that debt and bring it to a more manageable figure. My personal opinion is this. I don't think we as in the United States are in as much trouble from this as we first thought. I think when everybody started yelling market crash, that we just saw a few figures and it was a completely knee-jerk reaction. A lot of the stuff floating around YouTube is just clickbait. It's just trying to get you to click on some videos, and that's the realness, okay? Do I think Evergrande is a good investment? No. Do I think that Evergrande is in trouble, especially long-term? Yes. But I don't think they are in such bad shape especially after the negotiations with the interest payments or whatever, and seeing how much assets they actually have. I don't see it affecting us in the U.S. so much that it's going to just crumble our markets. I think this is an interesting story to watch unfold, and I'm excited to see whatever kind of strategy they decide to use and see how that all plays out. But I'm not selling a damn thing because of fear of the unknown or what may happen. But I will continue to have funds on the sidelines and in that glass case on the wall, ready to break and deploy whenever something actually does happen. And I will continue to add to that position a little bit at a time. It's not a huge position, but you want to always have some funds available and not have them all in the market. So whenever we do have a big correction, and one's coming at some point, there's a lot of overvaluations in this market. So we're going to have a good correction at some point, and that is the time to deploy your funds and buy things and really, really average down. I hope I was able to shed a little bit on the topic. If you have any questions about anything, please hit me up. Let me know in the comment section below. Remember to like, remember to subscribe. As always, I hope whatever you're invested in, I hope it goes to the moon and is not affected at all. I hope you all take care, and we will see you soon.